Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news the US Fed looks more trapped in policy choices than it has for a long time. But first up today, the US-UK trade deal was announced overnight to great fanfare. But in fact, it isn't much. Rather, it is a small set of carve-outs from the previous base case. Car tariffs on British-made cars will come down to 10% rather than 27.5%, steel tariffs would go to zero, and the threat of future pharmaceutical tariffs would recede. The overall headline US tariff of 10% seems to be still in place. And the UK has offered more market access to the US and a Boeing airplane order. But the US did not get changes on food standards or the UK's digital services taxes. The whole thing is very underwhelming. All headlines, no substance. But the equity markets liked it, even if the bond markets didn't. The US dollar rose on the news. Perhaps the equity markets also see progress coming in tomorrow's Swiss meeting between China and US representatives. Meanwhile, US jobless claims fell last week and by a bit more than seasonal factors would have assumed, coming in right at the level expected by analysts. There are now 1.846 million people on these benefits, whereas a year ago there were 1.743 million on them, a 5.9% rise. And American labour productivity fell 0.8% in the March quarter as output decreased 0.3% and hours worked increased 0.6%. This is their first decrease in productivity since the volatile pandemic years, and prior to that, the first Trump presidency. March wholesale inventories rose marginally, but so did sales in the pre-tariff rush, so the inventory to sales balance was little changed and not exhibiting any stress. Also not changing much were American inflation expectations in April, which isn't as sanguine as it sounds because they came in at the same elevated 3.6% level they jumped to in March. However, household perceptions about their current financial situations deteriorated, with the share of consumers reporting that they are somewhat or much worse off compared to 1 year ago increasing. Similarly, households' expectations about their future financial situations deteriorated, with the share of those believing they will be somewhat or much worse off in a year now also rising. In Malaysia, their central bank held its policy rate at 3% overnight, as was expected. They have low inflation of 1.4% and good 4.4% in economic expansion, but one that is fading, and they are vulnerable to the tariff war. In the meantime, Malaysian industrial production is still expanding at a healthy clip. In Europe, German industrial production is on the comeback, up 3% in March from February, and for the first time since May 2023, hardly lower than year-ago levels. Of course, this is data that predates the onset of the US tariff war. In England, their central bank cut its policy rate by 25 basis points to 4.25%, also as expected. But 2 of their 9 members voted for no change. It is their 4th rate cut since August 2023, when their rate reached 5.25% in the previous cycle. They currently have a 2.6% inflation rate, slowly easing, and a 1.4% economic expansion rate. With the Bank of England following the ECB down, along with Canada, soon Australia and likely New Zealand, it does point out that the US Fed is now boxed in by US fiscal policy, basically unable to cut rates because of the immediate inflation risk there. In Australia, they changed their laws, making it clearer that buy now, pay later contracts are covered by their National Credit Code. ASIC has now issued regulatory guidance for the buy now, pay later sector. And we should probably note that lithium prices have fallen further, with the bubble well and truly over, and prices back to their pre-bubble 2021 levels. The reduction impetus is going out of global container freight rates, down just 1% last week to be 23% lower than year-ago levels. Bulk cargo rates stopped rising in the past week. The US Treasury 10-year yield is now at 4.37%, up 10 basis points from this time yesterday. And the price of gold will start today at $3,303 an ounce, down $81 from yesterday. But oil prices are firmer today, up $1.50 at just under $60 a barrel in the US, while the international Brent price is now just under $63 a barrel. And the Kiwi dollar is now at 59.1 US cents, down 60 basis points from yesterday at this time, down a full 1 cent from Wednesday. Against the Aussie, we're down 20 basis points at 92.3 Australian cents. Against the euro, we're unchanged at 52.6 euro cents. That all means our trade-weighted index starts today at just on 67.6 and down another 20 basis points. And the Bitcoin price starts today at $101,054, up 4.6% from yesterday. Volatility of the past 24 hours has been moderate at just under plus or minus 3%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.